Welcome back, delegates, to another exciting session at Huddle 2021. Today, we will have our one of the most exciting sessions planned for today. Overview of the private crypto ecosystem in India. This session is moderated by Mr. Anirudh Rastogi, founder Ikigai Law, Avinash Shekhar, co-CEO Zebpay, Hemant Mohapatra, partner Lightspeed, Ashish Singhal, founder and CEO CoinSwitch, Jaideep Reddy, leader Nishith Desai Associates. I'd like to hand it over to Anirudh to continue the discussion with the speakers, and delegates look forward to an exciting discussion. Thank you.
Thank you very much, Soham. Good afternoon, everyone. I'm really excited to join you today, and particularly excited about the topic I have at hand because it really gives me the freedom to kind of go in all directions and write what I have to on this blank slate. And I think I'm privileged to have this set of panelists because they allow me to do that as well, right? Coming from very, very diverse experiences and bringing diverse perspectives. Hemant, who brings this rigorous kind of first principles approach to all things tech and been an investor in the crypto industry for a really long time. Avinash, who's the co-CEO of Zebpay, really one of the earliest kind of crypto businesses. I've seen the market and the industry evolving over the years. Ashish, who entered India, I believe, after you'd set up elsewhere, and then came in with a very simple insight, which really is that the next millions of new users will need a simpler way to interact with the crypto industry. And I think I find that idea very exciting. Would love to hear more. Jaideep, who worked very, very passionately with a lot of commitment on the RBI challenge, and I think we all owe him a beer for that. And really, really excited that we have him to bring a regulatory and policy kind of perspective to the discussion we're going to have. So we have a lot of questions and little time, so I'm going to dive in right away. Hemant, I'm going to start with you. You started investing in the crypto space in 2014, which really literally is a lifetime talking about the blockchain ecosystem. You've seen all the action that has been. Could you tell us how your own investment thesis has evolved over the years, and what has remained constant, if anything?
Yeah, I'm very happy to be here. Thank you for having me. So as you said, we have been investing in the crypto ecosystem and the blockchain ecosystem since 2014. Blockchain.com was one of the first investments we made in the US. One of the earliest investments we made, and one of the largest holdings even today. In the early days, there was a lot of debate around which parts of the crypto ecosystem are most venture backable. As VCs, we care about that aspect of investment quite a lot. And our incoming thesis many years ago was that the bottom layer, which is essentially the hardware that supports the upper layers, would be the first to find PMF, then the protocols, and then the applications. The reality has turned out to be somewhat similar, even though not exactly the same. A lot of the early crypto buzz and crypto funding went to the big mains of the world, as you know. Those companies became very, very quickly very large. And since then, I think we are seeing a lot of protocol layers coming up. And the next stage was protocol adoption. Protocols take a lot longer to be defined and evangelized. Developers tend to take their own time. They took their own time. And now I think we are seeing a lot of applications coming up on top. Now, what's changed? A couple of things. Our assessment that protocols will be hard to monetize. And most of the value will lie in the application layer wasn't exactly right. If you sort of go back to the TCP/IP protocol days, nobody makes money out of TCP/IP. The second protocol that you can think about that has really brought the world together is x86, which is this, in a way you can think of it not a protocol, but it's a standard that all microprocessor, these consumer-grade microprocessors, abide by. And the biggest companies are the Googles and the Facebooks that live on top of that ecosystem, but not the Dells and the HPs, right? I mean, they're as big as they are, they're not as big as the other ones. So we didn't know how much monetization could happen at the protocol layer. And given crypto economics, rent seeking at every layer was made possible. So monetization became less of a concern over time. So we were sort of right and wrong about how monetizable protocols would be, and it turns out it could be very monetizable. We also didn't expect, and I think that this might be true for most investors in the economy, just how quickly markets shift back and forth. We have seen 3 or 4 winters already, and we probably see a few more in this decade. And we were early into CryptoKitties. It was too early. And then before we could blink, NBA Top Shot happened, and we were too late to that, right? So we expected a lot of volatility, but we didn't expect just how much volume will go through the volatility pipes, and how quickly that will happen. And that's the second thing. And third, I think, learning just how big this TAM is. It is much, much bigger than we expected. Even local playbooks with local liquidity can become very, very large companies themselves. It is not a winner take all or even a winner take most market, and most things, including exchanges, marketplaces, brokerages. So we tend to get very excited about local players as well as global players in the crypto economy.
So Hemant, I'm going to take a cue from that and move to Ashish and ask him, why is the exchanges space not a winners take all play? Why should we have more than, say, 3 or 4 large exchange players in the market?
So I disagree with Hemant, or kind of agree to some points as well. I feel that exchanges, by the function of it, can become larger and larger, right? So there are a lot of problems that exchanges solve. Exchanges are not just a market order books which are providing liquidity to the market, right? They're also custodians of the user funds. They're also working on cybersecurity in becoming one of the largest asset managers in the local area itself, becoming regulatory front ends for governments, banks, and the custodians, right? So exchanges play a very, very large role. It may not become winner take all, but like we have seen across that mostly 2 to 3 players are able to dominate the market because they are able to build the technology at the top of it, right? So it's not just about creating an exchange, which is much simpler problem to solve, but then it becomes a function of demand and supply. Why Binance holds 70% of the market today in terms of liquidity is because of supply and demand. If users don't go to other platform, it's a chicken egg problem. Then they can't build liquidity on other platform. You can launch as a technology player n number of exchanges that you want to, but liquidity, security, and all those aggregate and becomes compounding effects for an exchange, right? Take us for example, right? We started like just a year ago. Today have over 9.5 million users, are the leading crypto players, and becoming bigger day by day. The more people join the bandwagon, our technology becomes faster, better, our security becomes better and better each day, and it becomes very, very hard for incumbents to compete with that liquidity, with that security, to start from zero, right? So I agree to Hemant's point that exchanges cannot be, winners take all, which is similar to every market. There is not a single winner out there, but there would be consolidation at the top, and there might be just 2 to 3 players. Yeah.
And yet, Ashish, you entered the party a little after, right? I mean, India already had a couple of larger exchange players, and you walked in with a simple insight that I articulated earlier, right? And built a market-leading product on that, kind of trying to bridge that gap. So, would you? Just taking a cue from your own kind of journey, it seems like it is possible, and there might be many gaps as we go along, yes, that newer players might be able to solve for.
Yeah. I'm not saying that there aren't problems that exist, and solving those will not create bigger companies. What I'm trying to say is that ultimately, when you solve enough problems, there aren't enough problems left which are big enough to solve, right? When we entered the market, we solved a very basic problem, right? Which is, it's very hard for a retail user who is used to a Swiggy experience of adding to cart and checkout and food is at their home to go to an exchange, understand order books, understand buy, sell. And we are expecting too much of him to get into crypto, right? Crypto in itself is very complex. And then you put that experience on top of it, he will never be part of the crypto bandwagon, right? So we came with a very small insight, which was the retail building market in general. I'm not saying that companies cannot solve the user problem and still become bigger. But what I'm trying to solve is that as exchanges go bigger and try to solve all major problem, the consolidation, the demand and supply would aggregate toward only few players at the top, as long as they keep on solving user problem at the heart of it.
Sure. So Avinash, what are some of these problems that still remain unsolved, in the exchange, exchange play, right? And what are these problems, that you would be worried that some new player could come in and solve for?
Yeah, so I think,
So,
as Ashish said, I think the
Avinash,
simplicity of. Can you hear me?
Would you?
Hello.
We can hear you.
Yeah.
Yes, we can hear you.
So I think,
Yes, we can hear you.
as I said, this simplicity of trading, I think, is the biggest problem or biggest issue which needs to be solved for Indian customers, because one of the basically disadvantages, you can say, is that there is a lack of regulatory clarity, and because of that, what happens is that certain things which should be like very, very simple, we are forced to make it complicated to comply with the law as much as we understand the law of the land right now. So I think
Could you give me an example, please?
for example, two things. For example, one is that let's say KYC. Okay. As of now, there are certain exchanges who are very strict on KYC. There are certain exchanges who are very loose, or essentially very easy on KYC. Although as an IMAI, we are trying to standardize that. So from a customer's point of view, obviously, the KYC should be as easy as possible. But if you look at from a regulatory point of view, regulatory agencies comes to me and says that, okay, do you know this customer, who he is, from where he got the money? Okay, it becomes a problem at that point of time. So as exchanges, we have to obviously take balanced approach, what to do there. So that's one example, I think. Second example again is around how do we, from an exchange point of view, I mean, how do we deal with taxes and all that? So that again, there is limited clarity on that. There is some clarity which came from the government. So this actually, in a way, like restrains the exchange to go and start thinking only and only from a customer point of view. If that happens, I think there is still a lots of scope to improve, to simplify the product. So yeah.
Sure. Now that gives me a good segue to actually go to Jaideep on the regulatory challenges as well. And one other challenge, Jaideep, that exchanges are constantly grappling with is banking, right? There is so what is your take on why the banks are not playing ball with the exchanges? Of course, there's one speculation that has always remained is that the RBI is informally kind of at work here. But having said that, regulatory clarity has not quite solved this problem in other countries either, right? So Singapore, for example, banking remains to be an issue. Estonia, banking does remain to be an issue. So two questions really: why are banks not cooperative? And second is, would regulatory clarity really solve for it?
Sure. So I think it can be addressed in two parts, at the India level and the global level. And the India level is probably has some factors unique to the global landscape, but also several unique factors of its own. The global landscape, the reason why banks may be hesitant is mostly because of their AML and risk policies, where possibly more conservative banks or banks with larger teams and more detailed policies may be reluctant to work with crypto companies. They may find that there are risk factors involved, and maybe less so due to regulatory uncertainty per se, in the sense of being worried that the banking regulator will come after them. Now, in the Indian scenario, what I would say is unique is that the banks are used to detailed codified guidelines on most types of transactions, whether it's imports, exports, taking collateral. Everything is codified in detail by the RBI in the form of circulars, notifications, etc. And when they find that nothing specific has been said, in fact, barring the May circular that came in a few months ago, there's absolutely no codified clarity from the RBI on how a bank has to deal with a crypto company. or a crypto transaction. Possibly, and that's what we sometimes hear from bankers as well, that the RBI has not said anything, so we are kind of hesitant. So that could be one reason. There's really no regulatory reason per se to stop a bank. In fact, whatever little uncertainty was there has been clarified by the RBI in the May 2021 circular.
You don't believe that the RBI was at work here, and honestly, the way I read the May circular was also that the RBI was just saving its own back, right, from basically not creating a situation where private players can then drag RBI again to the court, saying that how is the judgment being cited, or sorry, the April 2018 circular still being cited when it's now bad law. So my reading is slightly different here, Jaideep. Any thoughts?
I mean, I would say, to give due credit to the RBI, it didn't sit as a silent spectator at that point. When there was a gregarious kind of communication by one of the leading, sorry, not gregarious, egregious communication by the leading bank, citing the old RBI circular, it is incumbent on the regulator to step in. Now, whether the exchanges would have gone to court, we're all privy to discussion, so can't comment too much on that. But I mean, that is something
Well,
where I feel it was incumbent on the RBI to do something, and they did it.
well,
Now,
I would actually draw. Yeah. No, I would actually draw from what you just said and say that, well, it is incumbent on the RBI to act even when the banks are declining to provide services to legitimate business actors, right? I mean, for no good reason. I would say that they're equally obligated to step in, and may I say that the IMI judgment also kind of builds the case for somewhat for an RBI for the central bank to be obligated to not be a silent spectator. But yeah, no, fair. I mean, I think just want to segue to Ashish again on the banking issue itself. Ashish, do you think that there's some kind of end in sight for this banking issue that we are facing currently in India? How are crypto exchanges even kind of? I mean, how do you even operate on a day-to-day basis,
Sure.
knowing that, well, tomorrow some bank could pull the plug?
Sure.
How are you solving for that?
Sure, sure. So I think we have taken the Coinbase playbook in this regards, right? So since till last year, a lot of exchanges were kind of operating in the gray itself. Not saying that they were doing something wrong, but they were not engaging enough with the regulators and trying to showcase the problem and trying to understand, what are the factors that they are considering, that they are worried about, and trying to create a solution together, right? And since last year, the growth in the crypto industry has been so humongous that all these exchanges have now come in the front and trying to face these challenges rather than running away from it, right? So creating a good dialogue with the bank, understanding what are the main issues. As Jaideep also pointed out, RBI is actually helping us in that regard in making sure that there is clarity, and banks are now able to take a call whether to work with an exchange or not work with an exchange based on certain KYC norms, certain regulatory infrastructure that they have built in within their companies, and try to see whether this client works in my AML policy, KYC policy, and can I give them the account, right? So I would say that in the last year there has been a lot of development that has happened, and it is not at a point now where any bank can just come and say, I'm closing you down. There is a healthy dialogue which is happening between banks and the exchanges now, right? And creating a relationship, addressing their concerns, and making sure that we are putting our points forward as well. So I feel that we are very, very ahead in that mode, right? And some banks have been very, very supportive in this journey as well.
Sure. Okay. Hemant, I'm coming to you now. So we've all heard the Indian government's blockchain good, crypto bad narrative now for a while. And while I don't want to go into that debate of whether blockchain and crypto can be they're inextricable or not, I think lots been spoken about that at length. But do you believe that the government itself should be building its governance applications, and there are many being piloted out, including the proposed CBDC. Is it necessary for governments to build out these applications only on private blockchains, or do you believe it's actually a good idea to explore building out on public blockchains?
Look, I think I don't expect governments to understand all aspects of the technology as complex as blockchains or crypto. But I do expect governments to understand and care about how an existing framework or policy framework on privacy, security, data residency, how all of that can be shaken up by technologies that are coming up. So I do expect the government to care about that and try to understand that first. If you look at traditional software, earlier everybody thought that code is sacrosanct. You write a piece of code and then you protect it with your life, right? I mean, lawsuits have happened. You guys would know this a lot more than I do because some code leaked out. And over the few decades, as code became commodity, people realized open source is the way to go. And now you're seeing many more open source companies coming up where code is open. It is just crazy for people from the traditional mindset to believe that why is the most important part of my company, which is code, being shared with everybody. What do I have then as a company? So I think similar playbooks will probably play out in the crypto ecosystem as well. Over time, people will realize that, barring a few exceptions that have to do with truly important data or important use cases, everything else should be public. So my bet is that both public and private blockchains will coexist. But as an investor, I care a lot more about the public blockchain, and my bet is going to be that public blockchains will attract the smartest developers all over the world. It'll become more secure. As a result of that, it'll become more secure even the private ones over time, and it'll definitely be more scalable and usable. So my bet is absolutely on the public blockchain.
As an investor, do you have a thesis around private blockchains as well? Is there an opportunity there?
We haven't really built that to the extent that it needs to be. But public blockchains are the ones that we are seeing a lot more coming up. So our thesis evolves with the founders as they choose to work on a particular technology. It seems to be a lot more public than private.
Sure. So Avinash, when are we going to start seeing institutional adoption of cryptos in India? When is a Tesla equivalent, that kind of a move do we expect to see from a Reliance or a Tata's in India?
So again, I think we are seeing lots of interest from institutions. People are studying about crypto, understanding crypto. But again, when it comes to actual investment, actually putting the money into crypto, again, it goes back to the same thing that Reliance, Tata, they are again regulated by some agencies in India. And unless they have some kind of clarity as to 6 months down the line, what will happen, it is very, very difficult for them to bite the bullet, so to say, and put the actual money in crypto. So I think most of the institutions, or a large number of institutions which we have talked to, they are sitting on the fence right now. And this I'm talking about direct investment, let's say in Bitcoin, Ether, not in the crypto ecosystem, so to say. Obviously, that's a different ballgame altogether. But actual investment in crypto, they are, I think, right now sitting on a fence, waiting for some clarity from the government. Because owning crypto by an individual versus owning crypto by a regulated entity, maybe by SEBI or stock exchange, or that's a totally different decision metrics which you have to use there, basically.
Okay.
But yeah, we see lots of interest there. Yeah.
That gets us back to you, Jaideep, and the news report of the day before or so about a proposed bill that seeks to recognize cryptos as a commodity. So, what do you think this is likely going to change for us? And your thoughts. Jaideep,
I think, really speaking, the devil is in the detail there. Whether it's going to create, a self-contained framework, or whether it's going to amend a set of existing laws. Now, classifying crypto as a commodity has to be analyzed from the perspective of each bracket of laws. For instance, the tax laws classification and the FEMA classification have slightly different parameters and slightly different consequences. Similarly, the classification from the perspective of e-commerce laws, sale of goods law, will crypto be treated as a good under, say, the Sale of Goods Act, the GST? So I think possibly it could be a combination of number one, a self-contained framework to license exchanges and wallet providers and any other intermediaries. And number two, possibly a series of amendments to existing statutes to clarify the treatment of crypto. That may be a plausible framework where once it is, say, classified as FEMA, let's take an example that it is classified as an intangible good under FEMA. Then the implications under FEMA kind of flow on their own. Similar to a similar case for GST. So simply saying that this is a commodity for all purposes doesn't really work. It has to be in the context of a particular law. And of course, as we've been saying for a while, exchanges and wallet providers should be licensed, and that will bring greater transparency and accountability as well as credibility to the entire ecosystem.
Sure. Yeah, no, I mean, you're right, and I think the devil will lie in the details also, because I think even when we categorize and classify cryptos as a commodity, there is bound to be a lot of dissonance between in how a lot of the industry will seek to kind of not have the tokens categorized as securities, but rather as commodities, and that kind of the perpetual debate that we've had in any case, even without the benefit of a statute. But Hemant, I had the pleasure of reading your recent interview with Siddharth on ET Prime, and you made some really interesting comments. One particularly around the how the industry has been force-fitting blockchain as a solution for all kinds of problems, even if they could be solved by your regular non-blockchain based databases, right? And I find that similar challenge to be presenting itself also in the NFT domain. So very often I find myself wondering if, why do you really need to build an NFT application around this, right? Why couldn't it just be solved by a regular blockchain or even a conventional database, right? So one example people are talking about, how you could have now your land title as a token or your university certificate as a token, which you can just pass around and whatnot. But why can't it be just a regular database, right? Or even just a database but on the blockchain, a distributed ledger? Why does it have to make it by force-fitting NFT onto it? What really are we solving for?
We are solving for what the market really cares about. I think over-experimentation, excuse me, I think over-experimentation is a very good way to converge to the right use cases quickly. In the early days of the internet, everybody wanted to force fit the internet on everything, right? But in many cases, either the users were not ready for that use case to come online, or the underlying infrastructure that was required to make that use case really come alive weren't available, including payment rails, logistics services, discovery services, search services even, right? Those were not available at the time. They were too raw. I don't know if you remember, I'm old enough to remember webvan.com. I was still in college when they came out. They sold groceries online. Does that ring a bell? In 98, 99, right? Or pets.com. They sold pet supplies online. We have plenty of companies that do that now, right? So they were not bad ideas. They were just the market timing was off, sometimes by tens of years, right? But we needed that to sort of really converge on what really were the use cases that would work. It turns out, entertainment like YouTube, social media, like, Orkuts and so on, search, those were the right use cases for that stage of the internet. So, I think over-experimentation is happening today. I think a lot of force-fitting is happening today. I don't think it's a bad thing at all. I think we should expect a fairly high death rate in the early days of an NFT economy coming to life. And let the people experiment, let developers experiment, let founders experiment, let the market be the judge. As an investor, I'm much more oriented towards finding a truly category defining company and being in it, rather than worrying about the death rate that might happen in a category in the early days.
Yeah, no, I cannot disagree with that at all. But I would also be very curious to see if, either Ashish or Avinash, you have an answer to this question also from a technical lens, which is that, do we really need NFT-based solutions for a lot of the things that we are creating as of today?
Sure. So Anirudh, just to start off, first to say that I'm not a big believer in the NFT craze which is happening now. But to answer your particular question, why say a degree record needs to be on blockchain, why it needs to be an NFT, I think it's about passing the information as well, right? Say you're applying for a job. The recruiter needs to validate the kind of degrees that you claim to have, right? So going to a institute, getting those validations will take time, right? Having those on a public network or a private network with some amount of payment mechanism where you, as a candidate, can validate even some of the employees or the company details as well, and as a company can validate as an employee details, right? So it can create an infrastructure where the information movement is supported and can actually help you deliver the value from blockchain that you look out for, right? So that's this particular instance I wanted to answer. Again, coming to your point, there is a lot of overfitting, and what Hemant said very, very rightly, that there is an overfitting, but today we can't be the judge of what is a valid use case and what is not a valid use case. Only the market would determine that, and there are a lot of valid use case that exist outside. Whether NFT is the right way to solve it or the future technology would be the right way to solve it is only time will tell. But there are a lot of inefficiencies in the system that we live in, and we are all as innovators trying to build and trying to solve these inefficiencies through crypto, through blockchain, through NFTs today.
There is one more small
that's
point on this, Anirudh,
yeah.
is that obviously over experimentation as an industry it is good, but as a retail investor, I think you have to be very, very cautious in terms of whether it's like a genuine experimentation or it's like something is like there is no experimentation. It's just like just a like hype which is being created. So that is, I think, from a retail point of view, it becomes very, very important when you're actually putting money in buying, in spending like $100,000 or $10,000 in buying an NFT. So I think retail investors here need to be very, very cautious putting money there.
No, absolutely. Jaideep, we've been following the recent ED notices issued to some of the industry players. Do you think that there's this kind of fundamentally changes the way blockchain companies in India would be looking to kind of structure or restructure their business operations? What are the some of the takeaways for us as lawyers and policy folks from this incident?
Sure. Being involved, I'll just comment only on the publicly available aspects of that. So as far as the ED matter goes, one, it has been around 8 years since Bitcoin has come in, where we haven't seen any real clarity under FEMA. And this new enforcement action is kind of a double-edged sword. One, it may result in some clarity coming about as the proceedings take their course, is kind of setting a precedent for other players. But at the same time, it's somewhat unfortunate because having sat quiet for 8 years, the players are now faced with a consequence under FEMA, not having clarity. And there are, of course, principles of law that when an administrative agency has acted in a particular manner for a period of time under a statute, a legitimate expectation is created about a certain treatment under that law. Now, whether the entire industry is going to be turned on its head in terms of whether wallet transfers are going to be questioned per se is an open question. Having said that, as a law firm, we've always said that anything cross-border activity in terms of transfer of cryptocurrency between, say, a resident and a non-resident is likely to raise questions under FEMA. It could be seen as an export of an intangible asset for which the corresponding remittance has to come in through authorized banking channels. So if a resident is making a wallet transfer to a non-resident, that raises a question. But another question to be considered is the onus on the resident or is the onus on the platform providing the facility? The platform in that regard is similar to an email service provider. There may be all kinds of activities which happen over email, but ultimately, if a user is doing something in contravention, it is their onus. So the ED matter may have a silver lining in the sense that over time you may get a clarity from a court, or maybe if a new law comes in, that will supersede this as well.
Anirudh, you are on
Not
mute.
able to hear you, Anirudh.
Sorry. Yeah, no, fair point. And I think a related challenge, Jaideep, here is what is a cross-border transaction? How do you determine the situs or where is a crypto asset really residing at any point in time, right? Any thoughts on that? I mean, I don't think there's really any great clarity on this point, but
Yeah,
what
we
do you
don't
have to say?
express clarity in India, so we have to extrapolate based on other contexts in law. There are a couple of high court cases which talk about the situs of an intangible asset in the context of intellectual property. So those hold that the situs of an intangible asset is where the owner resides. So if we talk about a crypto wallet owner transferring to their own wallet, even if it's held on a foreign platform, one can make out a case that it has not really moved out of India because it is still owned by the same person. There's also been an interim order of a UK court holding to a similar effect in the context of cryptocurrency, that the situs of a cryptocurrency is where the owner resides. The Supreme Court in the IMAI case recognized that crypto is a locationless phenomenon. So, really speaking, we may wait for specific clarity in the Indian context by an authority, but till then, there are some principles of law which can guide us on the lines of what I said.
Perfect. That's interesting. Anybody who wants to come in from a more kind of technical lens here on, where does a crypto asset really reside, right? I mean, from a technical standpoint, uh, how do you trace it down to a particular location?
I think more than location, it's also about identity linking, right? And blockchain is, to be honest, is built for that, to be able to prove your identity, right? So there are some innovative solutions from a technical standpoint which can be built, which can be fitted around the regulations that we have today as well. I'm not saying that the regulations do not need to evolve. They definitely do need to evolve to catch up with the technology growth that we are seeing in this industry. But I'm also saying that the burden lies on the companies and innovators as well to be able to build those solutions to link to the current law and make sure they are in compliant of that, right? So we at CoinSwitch are working on some of these principles and trying to create solutions which could ultimately not solve it 100% but can give you say 95% assurances on any money movement or crypto movement that may happen, and make us more reliant and more law friendly in not having a better word there, but with the government, and make sure that we are able to pass that information to the government because their concerns are valid as well, and able to still allow those use cases to happen and exist in this ecosystem.
Fair enough. So Avinash, there's a question for you, and maybe Ashish, Hemant, feel free to jump in. So what is the future of exchanges? Is the future decentralized?
So I think decentralization, the concept of decentralization itself is like started with Bitcoin. which is a decentralized asset, so to say. So I think there are lots of innovations which are happening in decentralized space, including decentralized exchanges. And decentralized exchange will form a large base of, will attract a large base of customers going forward. They are already attracting. My sense is that both centralized and decentralized exchange will coexist. From a regulation point of view or from an acceptability point of view, I think one of the challenge with the decentralized exchanges need to solve is on the KYC front. Okay, and I think if they are able to solve that challenge, maybe the adoption will increase significantly. But till the time that happens, I think centralized exchange will continue to have a higher market share or will attract more customers, because the centralized exchange will get more support from the regulators than the decentralized exchange. But yeah, from a technological point of view, I think if they're able to solve these problems, I think they will. Decentralization is the future, basically, decentralization.
Hemant, do you have a take on this, or Ashish? Either of you?
Yeah, I would not disagree with that. I think at least my nuance to that response from Avinash is that I think in mature markets where institutional adoption is taken off, I do expect centralized exchanges to be dominant players versus the decentralized ones. But I think the long run, as the core issues with DEXs today, tend to be around maintaining a precise order book or maintaining enough liquidity on both sides. I think when those things are solved for, the DeFi approach is far more superior in terms of transparency, in terms of security, in terms of accessibility and yield. So I think those should play out, hopefully, in that direction in the future.
So just to jump in here, Anirudh, so I believe that the answer is not that simple, that whether centralized exchange would succeed or decentralized exchange would succeed. How we look toward the future, and we could be totally wrong here as well, is a mixture of both. There are cases which an exchange has to do centrally, but there are pieces which can be decentral within the central exchange itself, right? So like Hemant talked about the liquidity building, the automatic market making, right, which is much more advanced what exchanges like us do today, right? So I think the future lies there, but still we have to compliant with the KYC and the rule of the law, right? So making sure even as a central exchange or any exchange for that matters, having both pieces together, solving for the right use case rather figuring about whether it is decentralized or centralized, right? So I personally of the opinion that there would be mixed approaches as well, which would come out toward the future.
No, sure, Ashish. I think interesting point, which makes me wonder sometimes, and I'm definitely going to bring it up in my session tomorrow on DeFi, which is that can decentralized finance ever be truly decentralized, right? There will always be, the way I see, elements of centralization, but a larger, within a larger kind of DeFi ecosystem. And possibly in the near future, at least regulators will not let you regulation will bring in a certain element of centralization in any case into anything that you basically build out. But with that, Soham, I think you've come here to take us back, and kind of. I think we're out of time now. So do we have a minute, or should we?
We've got a minute, so we can take questions.
Okay. I think I've tried to cover some of the questions already in that have been asked here, but I do want to just basically ask all the panelists one question, which is, and maybe you can all go one by one, take a minute each, maybe a half a minute each. So what are the biggest kind of trends or opportunities in the global crypto space that you see coming in the next 2 to 3 years? And of these, what are those opportunities that you anticipate will play out in India in an equal measure? So maybe we could start with Ashish, then Avinash, Hemant, and Reddy.
We particularly are excited a lot about lending and insurance within the crypto and the blockchain industry. And we believe that, as an exchange, the logical extension could also be a platform which can enable millions and millions of people around India, even the remotest corners of India, to allow microloans to happen to allow lending to happen easily and securely through blockchain platforms, right? So we are very, very excited about that particular piece.
Okay, Avinash.
Yeah, so I think lending and borrowing next 4 or 5 years will be the biggest area where like tremendous amount of growth will happen. Lots of billion-dollar companies will be made. And I think again, coming back to India, like this is one space where we have a regulatory clarity. We can build, we can solve lots of problems, build bigger businesses. So lending, borrowing, I think my vote goes to lending, borrowing.
So, I mean, I'm spending a bunch of time trying to understand the formalization of speculation in the crypto markets. I think speculation has been around since thousands of years, and people tend to give it a bad name. I think it's not as bad as it needs to be. So I'm looking for things that formalize and shape the speculative nature of the crypto markets, things like community trading, things like use cases like NFTs and gaming. Those two are areas of interest for me right now. And broadly, I think DeFi UI UX is pretty crappy right now, and I would love to sort of find ways to get that solved. I think it's a big problem.
Yeah, no, absolutely. Yeah, no, absolutely. My vote also goes with. I like the way you put it, formalization of speculation. Certainly, in Jaideep, while Ashish and Avinash talk about the big lending opportunity in cryptos in India over the next 5 years, are you as a lawyer wondering like how exactly, right? I mean, what's I'm not sure how the RBI is likely going to kind of look at something like this. But yeah, I mean, your comments on that or your own kind of prediction for what's coming.
Sure. I think the general tension between some of the principles of traditional regulation versus the blockchain as a technology, which also is there to some extent for the internet, but because blockchain is more value driven than information driven. Some of the principles of having a single entity accountable at a single location, whereas blockchain is borderless, and India's unique regime of exchange controls, which largely have been phased out in most of the developed economies. How are we going to ultimately reconcile that with blockchain based products? Buying and selling and trading is one thing which is under everyone's lens. But as you all said, lending and borrowing, and not just that, you have blockchain based token funds. You have worldwide games where gamers from all around the world are playing on a single network, exchanging tokens back and forth. How does that interact with exchange controls? These are some of the tensions that maybe over 3 to 5 years we'll have to see how they play out.
Fantastic. I think it's been a great panel. Thank you very much. I took the opportunity to ask you all questions that were most pressing in my own head, and I have some very insightful answers. So thank you. Enjoyed it a lot.
Thank you, Anirudh.
Thanks.
Thank you, Ashish, Jaideep, Avinash, Hemant for an exciting conversation. I would like to end the session by thanking our partners, our title partner CoinDCX and Zebpay, powered by partner CoinSwitch, brought to you by partner Bitmins, platinum partner Facebook, polished partner Global DCA, inside partner Ikigai Law. Delegates, please look forward to the upcoming sessions at Hotel 2021. And thank you, speakers. And thank you.
Thanks. Bye.